Hello friends, my name is Dr. Bharath Chandra. Videos are meant for the benefit of society. Today's topic, very apt, interesting, useful for everybody. Is the market fall temporary? See this video. Since the beginning of July, Indian stock markets have been on a general uptrend. Nifty has had only around 4 to 5 negative closing days during the last 30 trading days. However, in the last 2-3 days, markets were slightly negative. Now look at the chart. Nifty correction after 8 days of rally. 5th August plus 0.9%. 8th August 10, 11, 12, 16, 17, 18. Nifty closed positive. 19th August there was a fall of 1.10%. 22nd August minus 1.51% and 23rd August 0.50% upwards. Some of the reasons for the recent correction in the markets are: number one, profit booking in our markets. Nifty has been moving higher from around 15,300 level till almost 18,000, which is a raise of 18% in 2 months. So as Nifty approached the 18,000 mark, short-term investors must have booked profits. In fact, this recent rally was beyond expectations of most investors. Nifty 18,000 question mark was one of our videos about 10 days back, where we had mentioned that there could be some profit booking in markets when Nifty is near the psychological mark of 18,000, since there is resistance at that point. If in case the profit booking continues, then there is an initial support for Nifty around 17,000 mark and then around 16,600. Second reason for the temporary fall in the market is US Federal Reserve meeting between August 25 to 27. The inflation in US is still very high, close to the 40-year high. US Federal Reserve will have to continue to hike interest rate until inflation reduces significantly. Rising interest rates in US is a negative news, since FIs had borrowed at low interest rates and invested in stock markets all over the world. As the interest rates rise, FIIs will be forced to sell stocks and repay the loans, since the interest payments will rise. As FIIs sell stocks, Indian markets will become slightly weak, and hence with these expectations, many investors must have sold some stocks already. Number three, effects of slowdown on various sectors. As interest rates are increased in US and Europe, the GDP growth has slowed down already and is expected to fall further. Many sectors such as IT, pharma, which are heavily dependent on US and Europe for their business, will be negatively impacted. This is the reason for IT stocks being weak in the last 2 to 3 days. For short term, many individual stocks have started entering sell zone due to the fall in markets. For 8 days, when markets went up, it moved up slowly. But when markets fell for 2 days, it almost wiped out the entire 8-day rally. This is how markets move in the short term. The long term, the reason for the overall markets to go up is because of individual companies doing well in their business, resulting in more profits and therefore higher stock prices. All reasons for fall in stock prices are usually temporary and have more impact on the sentiment of investors rather than permanent impact on the companies. So focus on the fundamentals of the company. The daily price fluctuations are important only for short-term investors, and also to know what your investments are worth as on particular day. In the short term, stock prices may not always reflect the correct fundamentals of the company always. There are no major negatives in India as of now. However, the high inflation and slowing growth in developed countries could impact global stock markets. but nobody can accurately predict whether this is the start of a small correction or is it just temporary stop in the rally before further uptrend. Let us wait and see. Now at the end of the video, here is a question. Do you log into your trading app terminal every day? Yes or no? If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, send this video to all your friends, and the video is good, press the like button. Thank you for watching. Bye bye. All the best.